What's up, YouTube? I'm Xander Connect, professional musician, options trader, and I just wanted to make this video today to share a concrete example of a 0-day to expiration option selling strategy. Today on the NASDAQ index, I sold a 9100 put. You can see that right here. I bought a 9050 put as a hedge. No, I didn't make $1,000. That's just a bid-ask spread error. But I made $15 in one day out of a 5,000 margin requirement, which over time is nothing to sneeze at. I'll dive into a little bit greater detail after I play some bumper music for you guys. Guess the tune. Just kidding. Okay. So here's the daily chart. Now the story yesterday was the obvious massive decline. The bet that I made today was very simple. It was just that we wouldn't see a decline of that magnitude again. So pretty simple trade. I bet 500 points below the money for the short strike. It was at 1 delta when I opened this trade. The only other thing you might be curious about is when did I open it? Okay, let's take a look at the daily chart to answer that question, or the intraday chart. My computer's seen better days. It can be a bit on the laggy side, but here we go. So, oh, by the way, see this thing down here, the last 9400? That's my trigger for my alert. It'll go off my phone so I can manually close the trade out, stop it out if it had gone lower. You saw that on the daily chart as well. So, okay, when did I enter the trade? I'm not always this lucky, but I have been watching the markets recently, and typically I do have my best results when I enter within the first hour and a half of, or maybe 2 hours of trading for the day. Today I totally nailed the bottom. Nailed it. I entered exactly right here when it was at the very bottom, and I felt pretty good about myself. I know it's not always that easy. As luck would have it, it rallied right off that low, 9,600 from yesterday. I could have closed it out there at a pretty good profit. In the future, maybe I would. I held onto it though, and that was also a decision I was totally okay with. You can see it actually did go a little bit lower, but I was not sweating it. I still had 400 more points to go. Bounced off that resistance level of the day, I guess, and closed up nicely, and I just let everything expire worthless. The advantage of being patient and waiting for those drops, especially drops to resistance lines, is that also you see the implied volatility goes up considerably. So that's definitely to your advantage as an options seller as well. So you could have profitably entered, I would have recommended 3 different points today. Some people would enter first thing in the morning. Yeah, you can do that. Disadvantage is that sometimes you see a drop, so not great, and then also implied volatility is not high. This is the place I chose to enter. In my experience, on average, that seems to be about right. 8:30, 7:30, something like that, whenever it drops in the morning. Other people might wait till the end of the day. I've also done that in the past. Sometimes that has great results. Wait till the last 2 hours or even less of trading. You can see the implied volatility was even better there, and that also would have been a great time to enter. So there's no hard and fast rule, guys, but keep aware of your options, I guess, and always have a stop loss. I would have stopped this trade out if I had gotten to, say, maybe $100 total loss after I opened it for 15 credit. So have a plan. Stop yourself out if it goes against you. However you do that. If you want to use futures, that's great too. And I think that's about it for today. Up $15 out of a $5,000 margin requirement, so didn't exactly break the bank, but over time that is a repeatable trade. It had a 99% chance of success because it was 1 delta when I opened it. So over time, if you do these trades, it will add up in your favor. That's all I got for you. Hit me up in Discord if you want to talk or take violin lessons or whatever. And good luck to you all.